Hey everybody, welcome back. The Prime Minister of the UK just reported out that they're gonna go into a second lockdown for 1 month. This is not good. They're gonna go into a different lockdown. What they're gonna be doing is they're gonna be mandating, okay, starting in pretty much 5 to 6 days. They're gonna be mandating until December 2nd that they will remain, the schools and colleges will remain open, but what they're gonna have to do is non-essential shops, hospitality will have to close, and the travel will be under new restrictions. So folks, they're going into a second lockdown, and a lot of countries in Europe are joining the first countries that started with this. And the reason is, I can show you this. So the cases are going up like crazy. The COVID-19 doesn't like the cold weather, and you can see it here. I mean, let's just look at the UK. Even if you go to a log scale, which tells you specific tipping points on the actual curve, you could see the curve starting to pitch up. When you see this on a log scale, since the scale is a logarithmic to the 10th, I mean, that means that any changes you see on the curve are going to be significant. They're going to be exponential. So when you see something like this going up, it means that it's gonna be an exponential growth on the number of cases. Now, this is another one. You could see the spike clearly. You know, this thing started to pop up. Yes, I mean, it could be potentially related to testing, but it's not good, guys. I mean, cumulative cases are going up. This is the same thing that's happening back in March. Now, when we look at this graph, we say, oh yeah, but we're much higher than we were below. But this is it's an accumulation of cases. So what's really important is the log curves. Now look at the US. It's the same thing, same behavior on that scale. Daily cases are going up, and obviously, you know, we're talking daily cases. They're starting to spike up now. Of course, we don't have the cases that we had before, but for some countries like the UK, if you look at it, they were down, but now it's starting to spike up. Not good. So this is why this is happening, okay? They're going into lockdown again. This is going to be a terrible Christmas, guys. I mean, in the US, it probably hit by Thanksgiving. I don't want to warn this. I want to see a correlation between what's going on right now and try to predict the stock market, because it's going to be really interesting. Back in March, it was the first wave of uncertainty we had. Obviously, it was totally different. It's just definitely not good. So things like this, right? Like, we just reported 100,000 cases, just, you know, just by now, right? On Friday in the US. This is a lot, right? So when you see this curve and you see 100,000 cases in the US in just one single day, I mean, think about it, right? I mean, we're talking 100,000 here, and we were having, yeah, of course, right? I mean, we're talking 250,000, 260,000. It's gonna continue to pick up based on Europe. Remember, we are behind them. So whatever trend they see is gonna start popping up after, you know, a couple weeks, if not a month in the US. So I want to correlate this to a little trend line of what happened in March and the S&P 500, and you could see this is very interesting. So out of the whole thing here, the most important thing is when we got the stimulus. So when we got stimulus, when they passed the payment protection and the SBA protection program, and they signed the CARES Act in March 27th, that's when the market started to go up. What does that tell you? We need stimulus. So the market's going to continue to go down if their stimulus is not passed. And why? Because there's a lot of companies at risk here. There's people that are losing jobs. There's people that they're afraid of what's going to happen in the end of the year. It's coming up, and if they get sick, they might not be able to go to work. They have to pay the bills. Folks, it's going to be really interesting what's going to happen. Now, I just have little detail that I want to share with you guys. And for that, I'm going to go to my Thinkorswim account. This is the VIX. So if you look at the VIX in March, it started to pick up all the way to 85. What I want you to see is the trend line. So the changes in the VIX were significant up to a point, but it's important to see that yes, we did get a pick here. There's no way we're gonna get the levels of uncertainty that we got back in here in middle of March, end of March, beginning of April. No way. Why? Well, because it just doesn't make sense. I mean, it's not gonna happen. It just, we know a lot about this virus. Some of these things are priced in. We cannot predict the market, but obviously it makes sense that we're not gonna go back to those levels. What another important thing that I want to see is some of the levels here on the yearly chart for the S&P. It's just interesting to see that yes, we did get a tipping point at 348 you know, last week, but you know, we got some sell pressure here that's it's becoming oversold, but at the same time we're gonna reverse. So here's the thing. We might be able to double dip, and this might be a double dip recession, and we might get to some of the levels here on the 300 roughly, because that's a level of support. One of the things that I always look, it's the Fibonacci retracement lines, and yes, I mean, like we're talking 305 and some of the most important retracement levels. I mean, if we break the 305, it's probably going to go lower, but we're very close to the 23.5% on here. We could potentially bounce back like we did here, but it all depends on the stimulus and it all depends on the election. So sometimes these technicals they work, sometimes they might not be able to predict what you really want. So folks, I just see this as a buying opportunity for tech. So I see this potential for accumulation. One thing I learned from the March lows, as you can see, is you have to buy when everybody is fearful. You want to buy and accumulate. So you don't go all in, but you buy little by little. And this is why, the reason why is because things like this can happen. Nobody knew what was going to happen back in March. They passed a stimulus. They helped the people of the United States, and things. The stock market likes stimulus, so it's going to go up. So my recommendation is do not panic. Let's wait to see what happens on Monday. Let's see what happens on Tuesday, obviously Wednesday. There's going to be a lot of volatility. We do not know what's going to happen. There could be rioting. There could be a lot of things going on this election. There's a very particular election. Lockdowns coming up. There's a lot of pressure for the elections. A lot of uncertainty because there's no stimulus, and obviously the stock market doesn't like that. So folks, my recommendation is be alert. Look at the stock market in the next week. Look at the news, watch the news. If you didn't vote, you know, go send that ballot up and make sure you do vote. Go to the place, vote, and make sure that you do that, exercise that right, because I think that's important. And this is going to be a particular election, particular time. So for long-term investors, this is a very, very good opportunity. And I think the safest sector right now, it's tech. Tech is going to do good no matter what, who wins. It doesn't like if it's Trump or Biden or anything like that. So I just wanted to keep you posted on this. Cases are going up. Europe is going into lockdown, potentially in the US in the coming weeks. So make sure that you sign up, like us, and this is going to be a series of videos that we're going to be launching. So stay tuned, folks. Thank you.